But this is all about just learning together, having some fun together, and we'll make sure that we network so everybody gets to meet each other. So, before we get started, as we get started though, on the case study front, we asked a friend of ours to join us today, and I want to set the stage for Amanda to join us. So Amanda Craine is the EVP over at Wells-Fargo, and I think I'm going to get to her right there. There we go. She's a member of TPG's advisory board for our government division, and has been a good friend of mine for many, many years now. She'll tell that story where we got started together. It feels like yesterday, but maybe it wasn't, because I think my oldest, who's 29, was a child. But I know, it's just crazy. But we've been good friends, we've been partners for a very long time. And I remember I called Amanda when I was embarking on the AI journey for TPG, and I had this idea of bringing Anna to life, even before we had her named. And I called her and said, Amanda, I really need your partnership on this. I would really love it if you can join TPG's corporate advisory board and help me bring Anna to life, bring the vision of this to life. It's something I've never done before, and I trust and respect you, and I want you to help us be way out in front on this. And so I thought I was going to have to twist an arm, and she was like, I'm in. I'm in, let's do it. It'll be a lot of fun. So I asked her to join us today and share a little bit about her background and why I think she's such a thought leader in not just in AI, but all things in customer relationships. So Amanda, if you can join us, I'm going to turn it over to you. Today, I'll let you do your bio. You do it better than me, and thank you so much for joining us. I really appreciate the 24 hours you're on the ground.
Thank you.
Welcome, Amanda. We're going to give you a little.
Actually, I think it just looked on. So first off, I didn't realize that your kids were so young, that they're all grown, and that just keeps me reminded of my age. But the other math that I was actually doing in my head as Lisa was talking about the journey that TPG has been on was that when I first met Lisa, which was about 20 years ago, that was just a few years after she had launched this whole idea behind TPG, and her dad was wondering, why are you listening to everyone's calls? Is that it was 10 years of failure. That overlapped with the time that I met Lisa, hired her company, and I guess part of what they were learning from was my last company, which was American Express at the time. But it's all good, because failing fast and learning a lot from those failures is a critical part of, I think, what innovation is all about. So, as Lisa mentioned, I currently head the operations group for the consumer and small business banking line of business at Wells Fargo. It is our largest line of business, and operations includes a number of different functional areas. So I'm in charge of inbound customer service. It's a really big shop there. Also in charge of fraud strategies and claims operations management. A large chunk of what we call core operations, or the back office. So I often like to say to my technology partners, if you ran out of time to automate it, or you ran out of budget to automate it, it's the stuff that still needs to happen to make the business run. And I'm also in charge of all of those ATM machines out there from Wells Fargo, as well as different areas like print and logistics management. And so, by the way, if you happen to go to an ATM machine that's branded Wells Fargo and there's a problem, you can actually call me, and I'll be able to deploy someone to get that machine working again. But prior to joining Wells, which was about a year and a half ago at this point, I also spent about 5 years at Citibank, and then prior to that, almost 9 years at American Express. And that's actually when I met Lisa. So a little bit about what I'm going to spend, I guess, the next half an hour or so talking about. And somebody, please keep me honest on time, because I can talk about customer experience all day, every day. A few weeks ago, Lisa called me up and she said, I would really love for you to be a guest speaker at TPG Innovation Day as part of CCW in Las Vegas. And I said, let me take a look at my calendar, and I happen to have this date open, so I said, yes, book me. And then I said, by the way, what do you want me to talk about? Do you notice the common theme here? Lisa calls me and I say yes before I even know what the task is. And once you get to know Lisa, if you don't know already, that's just how her relationships work. And so she said, what I'd like you to do is talk about innovation in the customer experience space. And that was a pretty broad topic, so I kept thinking about that, and I thought, well, that's a pretty broad topic. What am I going to talk about? So what I thought I would do is share a little bit of my perspective around how I think customer experience and innovation in that space has evolved over time, and how I believe now that a solution like Anna is such an incredible piece of innovation in moving us forward in that space, and more specifically how it applies to the call center environment and how that environment has continued to evolve as well from a servicing perspective. So I was introduced to this whole concept around customer experience about 20 years ago, and at that time I was still at American Express. And if you all remember, about 20 years ago, there was this new concept that seemed really big. It was catching like fire across a number of different industries, called Net Promoter Score, or NPS. And at that time, it was considered a huge innovation in the customer experience space because it afforded a very elegant and simple way to measure and evaluate customer experience and translate that into impact on business performance. And in my view, what that did was NPS propelled the idea of customer experience into a business priority, and it became a thing across different boardrooms and across different C-suites. And if you all remember way back in the day, that's also when a number of companies started to create customer experience functions and chief customer experience officers. And in fact, I had one of those titles at American Express. I became their director of customer experience for one of their lines of business. The challenge was I frankly didn't really know what that all meant. I also discovered that a number of my colleagues who were also starting to focus on that domain, if you will, also were struggling to kind of define what that all meant. So I embarked on the next several weeks and a few months into my new role, trying to understand what it all meant. And in that role, I happened to have inherited about 6 to 8 different vendors, business process outsource providers, that did everything from claims processing, because they're part of the product portfolio included insurance products, as well as inbound customer service. Now, what I did figure out was that each of those vendor partners had a quality program that was part of their contract. But each quality program had its own sort of tick sheets in terms of what they were looking for. They each individually and independently did call calibration sessions, and there were many of them. And they all came out with a report at the end of the month telling me and my team how they were doing. The challenge was we couldn't quite figure out how to look at it from a horizontal perspective. How do I answer that question that my general manager kept asking at the time, which was, tell me the performance around quality. Simple question, really difficult to answer. So what I knew was that whatever we had there wasn't quite working. We had a lot of different vendors, a lot of different quote-unquote quality programs, but no way to evaluate it in a consistent way. So we went through an RFP process, and after a lot of vetting and evaluating and meeting with different companies, we came upon TPG, and I remember when I actually got on an airplane and went out to Omaha, Nebraska to check out TPG's operations. And based on that day, that ended up becoming the sealing of the deal, if you will, and we signed on to TPG. And what TPG provided for us at that time was a consistent way of evaluating our call performance, our call center experience for our customers. They helped to define a consistent way of what it meant to provide quality servicing through our call centers. And we thought it was actually pretty cool because it gave us a way to answer that question, what is the performance around quality, but it also provided a report that our managers could access through a web-based format, which, by the way, 20 plus years ago, that was actually a big thing. That was actually considered groundbreaking. And we also were able to obtain analytics to inform what really meant, what was really important for our customers. So a horizontal way to answer the question around quality performance, web-based access to reports, and analytics to support what is really important to our customers. 20 plus years ago, that was considered not only effective, but also arguably industry leading. Well, Now let's fast forward 20 plus years later, and today, customer experience is not just a big strategic priority for businesses, but as you all know, it's actually considered a competitive advantage. So we've got, especially if you think about in my world, in the world of banking, consumer banking, you've got a lot of banks who offer very similar things. Similar products, similar services, everyone's got a mobile app, everyone's got a website, etc. So what's going to differentiate one from the other? And a lot of that comes down to customer experience. So not only has it become a competitive advantage, but it's also become a lot more complicated. Customers' definition of what good looks like is rapidly evolving. And no longer are customers thinking about convenience, for example, in the world of banking, as something like a drive-through. Back in the day, by the way, in the world of banking, that's what convenience meant. Was that you were able to get in a car with your entire family and go through a drive-through and get your banking done. Or be able to call a number on the back of your car into a call center that was open 7 days a week versus having to try and get to that bank branch before they closed Monday through Friday. And as we all know, back in the day, they closed before 5 p.m. So convenience today in the world of banking, and this I think applies to many other industries, is very different today. Now what customers are really expecting is the ability to do a lot of those sort of everyday transaction activities, like routine banking transactions, on their mobile app. It's easy, it's convenient, it's intuitive, and it's safe and it's secure. And all you have to do is have a smartphone and access to some Wi-Fi. Now when you think about how customers define what good looks like, they're not only taking the convenience of mobile app, but they're also looking at other factors that drive convenience to them. They're expecting you to create something that we call omni-channel experiences. So it's not just about having a great mobile app experience or having a great call center experience, but their expectation is that companies are going to create a connected experience across all of those channels. On top of that, customers are also expecting you to really know them and know them well. The reality is they're very well aware that you're collecting a lot of data on them. Whenever they go into that mobile app, they're able to collect data. When they're calling you for service, you're collecting data. When they make point-of-sale transactions, you're collecting data. And part of that expectation, as customers have opted into it, is for you to take all of that data to then be more predictive about the service experience that they're going to have. So, i.e., when I call you as a customer and I've been just on the mobile app, hopefully you know what it is I'm calling about and routing me appropriately. They're also expecting you to provide more relevant products and solutions that are really personalized and customized to their needs. So all of you all raise your hand to say that you're part of the revenue team, part of the sales team. That becomes really incredibly important. So customers' expectations today are now all about not just convenience, but having a predictive omni-channel experience that is personalized for them. That's a pretty high bar. So what does that mean in terms of customer experience, and how does that apply in the world of call centers? So I'm going to use sort of a retail banking experience, which again I think is a great sort of case study for applicability across a number of different industries. In the world of retail banking across the last, I would say 10, 15 years in particular, customers have increasingly adopted self-servicing and digital, mobile in particular. In fact, mobile adoption in the world of retail banking has outpaced browser adoption for quite some time. And for those of you, I'm not going to have a raise of hands, who do banking on your mobile app, also called mobile banking, you'll know what exactly we're talking about. At the same time, during this sort of adoption curve, foot traffic into the branches and waiting at the teller line on a Friday, for example, during paycheck day, have declined. This has been an industry phenomenon for a number of years. The other sort of data point that I have found really interesting is that during the pandemic, across the last 2 years, customers have also decreased their trips to the ATM machine. Now, if you think about how you've been doing your banking across the last couple of years during the pandemic, this might really resonate as well. But what's been really fascinating is that customers may have fewer trips to the ATM machine, but with each trip, they've actually deposited more money than ever before, or are withdrawing more money than ever before. And that behavior, by the way, appears to be persisting even post-pandemic as we return more and more back to a typical environment. So customers are going more mobile. They're going more self-service. So where do call centers fall? By the way, I remember a number of years ago, when I was still at a prior bank, I was actually at Citibank before I joined Wells-Fargo. There were a number of articles, and I would sit in conference rooms like this, again, pre-pandemic, where people would talk about maybe the death of call centers one day, that, if all that transaction volume is going to migrate into self-service and into digital in particular, then perhaps call centers will become a relic of the 20th century. And what I will say is that I don't think that's going to be happening anytime soon. And it's a question that I often get from the various teams that I have led, which is, how do we think about call center experiences and where does that channel fit in this world of digital first servicing? And from my perspective, what is really changing is the role of the call center. So back in the day, call centers used to be a primary servicing channel for all sorts of different types of activities. You would call the call center to check your balance. You would call the call center to file a claim. You would call the call center to update your account information. Today, all of those types of routine transactions are things that you can do probably more easily and more conveniently on the mobile app. You don't need to call a call center to do those types of activities. Instead, what call centers are becoming are more problem resolution centers and advice centers. Very different, and a fairly big pivot, actually. So more on that in a bit. Back to sort of this whole notion around digital first servicing, I also want to mention that banks, as you can imagine, have greatly benefited from that adoption curve from customers. In fact, they've invested significantly as an industry into this notion of digital first servicing. And they're not the only industry. I know industries like airline companies and hospitality have all been doing the same thing. And that's for a number of reasons. One, it is more convenient. It is super easy for the customer to be able to self-service. But it also affords a more cost-efficient way of servicing, and every single time that you interact with that mobile app, there's rich data that's getting gathered to then loop back into informing an increasingly better customer experience. So, when customers do call now, they're calling to get help. They're calling to get a problem resolved. They're calling because the value of hearing a human voice in a particular moment of truth is significant and valuable to that customer. So in many ways, the role of the call center and servicing through that channel, the stakes have gotten even higher. Meaning that it's tough to win in my words, brownie points, in calls like, what's my balance? That's something that you can do in the IVR, by the way, that you can do on the ATM machine, that you can do on the mobile app, and you can do on the browser. And it's all going to be the same information, and it's all going to be real time, and it's all going to be very accurate. And if you get that answer right for the customer, that's the customer expectation. And if you get that answer wrong, then that's probably going to turn into a complaint that you're going to have to solve later and another callback from that customer. So really tough to win brownie points on those types of routine transactional questions. But when a customer is calling about potential fraud on their account, that becomes a huge moment of truth. That becomes an opportunity to win that customer and cement that relationship for life, or it becomes an opportunity to lose a lifelong customer. So the stakes are getting even higher in terms of the experience that we all need to figure out how to deliver in a consistent way through that live servicing channel. So, how do we create a consistently high-quality servicing experience through the call center? Now, most of us here either directly lead and manage call centers, or we are providing support services that really help to enable high-performing call centers, whether they be for servicing and/or for sales-related activities. And having been around call centers for a good chunk of my career at this point, and I know you all will attest to this, driving a consistent experience in a call center environment has always been a huge challenge. This is a tough channel. People are not robots. Some of the tools that we have available in call centers in general are not necessarily where we want them to be. And the job is really, really tough. It's really, really challenging. As I like to say, our frontline servicing representatives arguably have the toughest job in the bank. They're not allowed to have a bad moment, a bad day, a bad week, because as far as that customer is concerned, they're calling you for the first time. They're calling you to help get a problem resolved. They're calling you to help them feel good about why they're banking with you. And that call center representative, what we call our frontline bankers, they represent the entire bank in that moment. So how do you drive a consistent customer experience? And just to put this into context in terms of how big the challenge is in my business today, I said Wells-Fargo was pretty big. We're number 3 bank in the country now. In our primary servicing queue, we handle about 6 million frontline banker-handled calls in any given month. That's across thousands of frontline bankers located in many, many buildings across at least 3 countries at this point. And as you all know, there's a certain amount of attrition that you can expect in the call center. And it's considered pretty good if you only have about a 20% annualized attrition rate. And in this labor market, that's likely getting a lot of pressure. And most of us have done away with scripts. We still do have things like call flows and call procedures. But if you think about what I just talked about in terms of the shifting role of the call center from being a place where you do a lot of more transactional servicing activity to being a problem resolution center and an advice center for our customers. That means that you've got to go well beyond just procedures and call flows and a whole lot of training. Because on each and every interaction with that customer, what you're really looking for from that frontline servicing representative is the ability to demonstrate judgment, critical thinking, active listening skills, and empathy. Because they're not just providing a balance on the account, they're helping to solve a real problem and to bring humanity into that call. And you gotta do that call after call after call after call. And in my case, at least 6 million of them in any given month. So, in order to do that, most of us have call quality management programs. So I'm going to spend a minute about what I think about call quality management programs. Sometimes called inline QC, coupled with QA, or just simply quality management. 20 plus years ago, quality programs meant that you had a bunch of people, stuff that Lisa actually talked about, a bunch of quality analysts who were specially trained to listen to calls and evaluate those calls against kind of a tick sheet. And by virtue of commercial necessity, they had to do it through sampling. There's no way out of the millions of calls in my shop, for example, that we can evaluate today every single one of those calls. It would just be infeasible from a commercial perspective, and it would just be a gigantic program. And when they evaluated those calls, not only was it done through sampling exercise, but it also meant that the coaching and the feedback to that frontliner would likely be occurring at best a few days after that call took place, and more than likely several weeks after that call took place. Now, I'm sure that many of us in the room who manage and lead call centers think, yeah, I got one of those programs. Yeah, that sounds really, really familiar. Well, the reason why it sounds familiar is that a lot of that hasn't really changed a whole lot in the last 20 years. I, for example, have a fairly significant set of folks who are quality evaluating all of our calls. And they feed it into a system, and they make sure that our frontline managers are able to provide feedback off of their tip sheet results. Now, obviously, this type of program has a number of different weaknesses. They're inherent in the program. Number one, you're clearly not evaluating every call. You're having to do a sample of calls, and oh, by the way, you're evaluating the performance of that frontliner based on just a few calls that that person handled in a given month, not the hundreds or probably thousands of calls that that frontliner handled in a given month. Feedback, as I mentioned, is also really, really lagged. Frankly, I can barely remember what I ate last week when I was doing a site visit in San Antonio, never mind having a frontline banker with all those calls that they're handling remember a particular call for which they're now getting feedback about 2-3 weeks after the fact. And by the way, assessments can still vary quite a bit. I mean, one of the things that you still have to incorporate into a quality management program is ongoing calibration. Because if you have a few hundred quality analysts listening to call after call after call, unless you're calibrating, they can start to diverge and have consistent outcomes and results. And one of the biggest inherent flaws in my view is that the stuff that you're evaluating the quality against may not even be the thing that your customers really care about. In the world of banking, and I think in a number of regulated industries, a lot of the focus of a QA program, right or wrong, is that they're focused on regulatory compliance and policy adherence. Did that person actually say the disclosure verbatim to the customer before they closed the sale or before they did a particular type of servicing? Were they compliant with, Regulation E, et cetera? If you're in the world of banking, you'll all know what I'm referencing. The good news is that technology coupled with artificial intelligence or advanced machine learning is now at a point where I think it can provide a really viable solution to the challenges that I just outlined in call center quality and performance management. In the last 2 decades or so, I have spent a lot of time meeting with a number of different vendors, both very established technology companies trying to look into the space, as well as with more sort of Silicon Valley type startup companies trying to solve specific aspects of the problem that I just outlined. And what I can say is that there's been some really good advancements. So for example, voice-to-text capture. Now, in any sort of automated call quality management program, if you don't have accurate or sufficiently accurate voice-to-text capture, the rest of it sort of falls apart. And there's been some really good advancements, I think, in that space, accounting for everything from accents to different types of languages, as well as even things like background noise and regional phrases and words. That accuracy now enables greater automation in call quality assessment, and when you marry that up with artificial intelligence, the assessment itself is not only increasingly accurate, but also consistently accurate. That sort of automation, as Lisa pointed out, also means that you can actually start to monitor every call, not just a sample. And you don't necessarily have to incur a one-to-one cost in order to really do that. And the best thing, I think, for the frontline servicing representative is that they can now get feedback in near real time. So this is bringing us back to Anna and a lot of what you're going to be hearing about from TPG throughout the day. and also probably looking at other competitor solutions out there in the conference forum where they're setting up all the different booths throughout the week. And one of the things that I've been privileged to do as a member of the TPG Advisory Board is I've had an opportunity to see how Anna has evolved in the last several years. And by the way, I took this as an opportunity for me to spend a lot of time with Lisa and her team talking about all the challenges that I've ever faced in managing call centers. Like, these are all the problems that you've got to try and figure out how to fix if you're going to have a really good, viable solution called Anna. And that's exactly what I think the team at TPG has really done. They've taken a lot of the inherent flaws in more traditional call quality management programs. They've been listening a great deal to their very important clients who've been continuing to give them feedback directly and indirectly, and pouring all of that in to their solution called Anna. So a couple of things about what I think makes Anna pretty unique, actually, from a number of other solutions that I have evaluated across the last many years. Number one, a lot of these sort of AI-driven solutions come with not a whole lot of experience in data sets. And I think some of this might resonate with many of you. When I've sat down, for example, with Silicon Valley type companies, and they've said, we've got this AI solution, whether it's in a chatbot application or something to that effect, there would always be this sort of what I call a bleed-in period. So it's not going to be all that accurate, Amanda. It's going to take several months, maybe even up to a year, a lot of tuning to try and get it right so that it actually has sufficient efficacy to be able to deploy at any kind of scale with actual customers. With Anna, in my view, she's a fully formed brain. It's 25 years of evaluations, of intelligence, across a number of different industries, across a number of different case situations, whether they be in sales or retention or in servicing. All put into Anna, and as a client, all you have to do is plug into it. Another is that Anna is not just looking for keywords. I've looked at a number of those solutions, by the way, where it's sort of a binary thing. They're going to look for and listen to disclosures, for example. And let's say there are 25 words in a particular sequence in that disclosure, and the frontline agent either has stated those words in that sequence, and that thing says, yep, did it right, or they didn't, and the thing says, nope, did not. Anna goes well beyond that. What Anna is really looking to do is replicate what a human quality analyst would do. So they're looking for, did that frontline representative probe to understand the problem or the question that the customer is calling about? Did that frontline servicing representative solve that problem? How was the customer sentiment during that call? Was it positive or was it negative? And by the way, in the world of banking, that sentiment becomes really critical. And this was something that I harped on quite a bit in the various sessions with Lisa and her team. Because we have something called the CFPB, by the way, Consumer Financial Protection Bureau. It's a pretty big agency. And one of the things that they were very much pushing on consumer banks to do was to create a customer complaint program. And all of us have one. But customer complaints is not just about looking for what I call magic words, like I have a complaint about something or I wasn't happy about something. It's also listening for customer sentiment. And I don't know about you all, but when I'm really irritated about something, when I'm calling for service or I'm at a front desk checking into a hotel, I don't raise my voice. I don't say that I want to speak to your manager, not unless it's really egregious. But I'm going to sound really irritated. And in a complaint program, you have to listen for that. And if you hear that, that's locked as a complaint. And of course, Anna's able to listen to every call, not just a sampling of calls, And yes, Anna can provide that feedback in near real time to the frontline maker. But what I think is really amazing about Anna is that it also provides the ability to really analyze what really matters to the customer and understand what really matters to the customer, to inform on the broader customer experience strategy and what's going to really help to differentiate your experience from those of your competitors. So if I think about innovation in the customer experience space, innovation from my perspective today, and I think in the next several years, is really all going to be centered around data. How we're able to use it, how we're able to structure it, how we're able to capture it, so that it's actually creating a virtuous loop, not only to support frontline performance management, but also to really inform on the broader customer experience strategy. So with that, I don't know if we've got time for questions.
If you have questions,